Yeah, let's bounce off the back of those UK numbers. They're just the latest in a long list of fairly negative readings on the UK economy. And that, of course, is prompting something of an exodus of wealth from the UK to other havens. A lot of that has been compounded by the fact that the dollar itself has sunk to its lowest level in 3 years. As rapidly changing US trade policies unsettles markets, expectations build for Fed Reserve rate cuts, fueling outflows from the world's biggest economy. What can we read into this? Look, overseas investment continuing to look for alternative venues to invest in and base their money. And the UAE is benefiting from that as the dollar experiences sustained weakness. Let's get some more take on this one now. We're going to be talking to our next guest, the founder of Currencies for You Limited, $3 billion in international payments and property consultants since 2009, a man who successfully transacted, as I said, those numbers in foreign currency payments. Has also founded 2 financial services companies, 2 property companies during his time. A busy, busy man. Suresh Gokani is the founder of Currencies for You, joining us live here in the studio, live in Dubai. Suresh, thanks for joining us.
Thank you for having me.
Listen, I want to get on to that dollar story, but the irony's not been lost on me that, you know, when you and I spoke yesterday, we were like, okay, come on, let's talk about dollar demise, and it's down 10% this year. A lot of people are looking for alternatives. And then you come in here this morning and the dollar's on an absolute rally this morning, given, of course, the unfortunate circumstances of last night. So let's just clarify that one, because people don't like volatility when it comes to currency markets. The dollar trading a percent up against the pound and the pound and the euro this morning. Is that just a blip in the market or not?
I think it's the market reacting to the fact that the negotiations with China are reaching some stage of clarity now. So you're seeing a little bit of a sell-off again. But what's going to happen going forward, I think the uncertainty is still there in the US market. So I don't think it looks pleasant for the US dollar at the moment.
When we spoke yesterday, the dollar had sunk to its lowest in 3 years, rapidly changing trade policy over there at the moment. Dollar's shed 10% of its value against major currencies this year. What's that sort of tell us about the uncertainty that's been generated by not just the US currency, but what has become the world's currency in recent years? What's that doing to investors and their sentiment?
I think there's certain economies like the UAE, like you just mentioned, Tom, that are really going to benefit from that. The dollar demise, if you like, seen 10% increase. So we've seen a huge outflow from the UK coming into the UAE markets. Think about it this way. A 5 million dirham property was costing 1.1 million in January this year in pounds. Now it's costing 1 million. That's £100,000 difference, which is paying for people's school fees if families are relocating, etc.
Have we relied too heavily on the dollar in the past, given the fact that we're seeing these question marks around the dollar, its future, etc.? Is this to do with the reliance that we've had on the safe haven that has been the dollar for so many years?
I think so, and I think that's where the term de-dollarization comes from. People are trying to depeg from the US dollar. I think with Trump and the way he's been recently with imposing tariffs, it was very volatile. There was nothing tactful about it. And that's going to cause a lot of uncertainty. And that's where markets just don't like that. And if there's an increase in volatility in currency markets, then you've got a knock-on effect to inflation as well. If a country is in a trade deficit and they're importing more than they're exporting, well, then the cost of living is going to go up. So day-to-day items become more and more expensive. And then you've got a population that's very unhappy with that.
Again, I'm glad you brought up the idea, the phrase that is de-dollarization, because it's one that's whispered here in the UAE. I mean, listen, it goes without saying that we are pegged. The dirham is pegged to the dollar. So when we talk about dollar decrease in value, what is the sort of knock-on effect for the dirham?
Okay, so in one aspect, it's great from an exporting. If we look at it just from exports and outflow of money coming into the UAE, it makes the dirham cheaper to buy. So people from the UK have seen that 10% increase. Everything's just become 10% cheaper if you're buying something in the UAE. From an importing perspective in the UAE, it's not so great because it means imports are now costing a little bit more But one thing that you have to bear in mind is in the UAE, it's a country where it has a trade surplus, meaning it exports more than it imports. So it's not going to have the same effect that it might in the UK, for example.
And when it comes to the UK, where, of course, you are headquartered, but you've got offices all over Europe and more recently here in Dubai as well, when investors are looking for alternatives, etc., how closely do they look at that exchange rate and also the importance of forward contracts moving forward?
It's very important, monitoring the exchange rate, because when you've got volatility, if you think institutionally, companies that are importing stock from overseas, look at food produce, if that becomes more expensive, then the knock-on effect to the consumer means that the prices are going up of the day-to-day items. That's not a great place to be, and that's happening across the board. So if you're a country that is importing more than you're exporting, it doesn't shape up well for you. It means that inflation is likely to spike, and that has its own downsides.
In light of that, and talking of clients that you speak to on a daily basis, etc., and given the volatility in the markets and the currency and the FX markets at the moment, how do you educate people when it comes to sort of currency exposure if they are looking to move money or move themselves?
In simple terms, not to take risk. When there is this much volatility in the market, and this goes naturally, that forward contracts is something that's happening more and more now. When you've got uncertainty in the markets and you see this volatile situation, people just want to fix their exchange rates in. The same way somebody would fix in a mortgage rate where you can lock in for 2 years or 5 years, and you have that peace of mind that it's a set payment every single month. People are doing that with the currency markets. So you would do a forward contract where you can take today's exchange rate, you can lock that in for a small deposit of 5% for a set period of time that suits you, for a denomination of the currency value, say $100,000 or $1 million equivalent. And that's dictated by you, the length of that contract, the amount that you wish to purchase. And for 5% just as a deposit, it's the safe method and the safe approach. And that's what we're trying to educate clients with, is in uncertain times in the currency markets, don't take risk. It's more important to hedge the business or hedge whatever you're buying and take that level of risk away from yourself.
Just very quickly as well, and obviously, one of the stories that we've been covering a long time is this migration of HNWIs into Dubai, into the UAE at the moment. Currencies for you opening an office over here is probably indicative of that as well. Are you seeing that evidence at the moment? And can we make the argument the weaker dollar drives investment into the region?
Correct, 100%. Last month, we transacted 157 million through various different liquidity providers into the UAE. That's a staggering number. And that's become more and more common now, so especially from the UK. We're also seeing it from Europe as well, where taxes are going up in the UK. It's not particularly fantastic for the high net worth individuals. They're looking to go somewhere else. And the UAE has so much to offer in that sense, even from a safety perspective, Tom. There is just so much that is attracting the world, I think, now to the UAE, and it's become a major trading hub.
Suraj, good to have you here. Really appreciate your time. Thanks for your thoughts, your insight into the markets as well, and the reading of them. The founder of Currencies for You, Suraj Gokani, thank you very much indeed.
Thank you for having me.